Did you know that many of the world's super wealthy invest and hold on to art? Yes, like paintings and rare things like that. Thanks to today's sponsor, Masterworks, they actually have a platform that allows the average person to get in on the opportunity of investing and diversifying with artwork. Masterworks team acquires what they consider to be blue chip art and they file it with the SEC, and then investors can actually come onto their platform and purchase shares into the overall investment. Fine art is an exclusive old form of investment and it can offer some great diversification. By the way, contemporary art prices appreciated in value more than the S&P 500's total return by 174% from 1995 to 2020, according to publicly available data compiled by Masterworks. The total wealth in art is estimated to be $1.7 trillion, and it's expected by Deloitte to grow $900 billion more by 2026. So the reason I wanted to tell you guys a little more about Masterworks is they even have an active secondary market to buy and sell shares of previous offerings with zero transaction fees, and anyone can invest and you get to choose from tons of individual artwork options. Over 170,000 people have already signed up for it so far. There's a high demand, but subscribers of my channel here on YouTube can use the link in the description and skip the wait list. So check the link down below in the description and let's get on to the video. What's up guys? In today's video, we're talking about RSI Divergence and how to use it to catch some really big moves in the market. This is a reversal style of trading, so you're looking to actually go against what seems to be the dominant trend, but it has some really powerful tools and implications and ways to potentially even catch really big moves in the market. Have you ever seen a market that just goes, it seems like it's screaming up and then all of a sudden it chops, it consolidates a little bit, and then it just drops dramatically? Well, this strategy actually has potential to kind of help us find these scenarios to possibly catch the reversal of a big trend like this. So I've marked a few examples here. Please remember that any strategy that I talk about here on YouTube, you should go check it out for yourself. You should go test it and do the thorough research before placing any trades. That's not the goal with this. I'm not trying to just give you everything on a platter. At the end of the day, you do have to take what I say, what I talk about, and go test it and see what works best for you. So I wanted to show some examples here with what I'm trying to talk about with RSI divergence. So if you don't know what RSI divergence is, it starts with a simple RSI indicator down here at the bottom of the screen. I'm using an RSI 7 period. Now, relative strength index is what RSI stands for. And when we're looking at the RSI, what we're discussing is a oscillating tool or indicator. You can find plenty of videos out there on the RSI if you're confused about it, but it is an oscillating tool or indicator on the chart that helps us identify potential stretched or overstretched or oversold locations in the chart. But if you're not super familiar with what RSI divergence is it's one step further using the RSI. What we're actually looking for is a divergence from the price of a market, or the price action more specifically of a market, in combination with the RSI itself. And this is a great example. Now, please know some of the ones that I'm showing you, they are cherry picked on purpose to show you what some of the good ones look like. Anytime someone shows you on YouTube an example of something, usually they're going to show you a good example first, and then maybe we can look at a bad example in just a moment. But the idea here is that we do have some price action here, which is making what we would consider a nice little uptrend, meaning higher highs, right? How often have you heard the concept of a market in a uptrend makes higher highs, right? We can put HA and higher lows, right? That's pretty much what a simple definition of a trending market is by a lot of different textbook standards, and what people generally look for is they see a market that is putting in higher highs in an uptrend. Well, what about lower highs? What does lower highs usually tell us about a market? Well, lower high means that it is cluing that the market is probably headed lower, right? It's showing weakness in a market. Well, what if there was some hidden divergence in the RSI that showed us that there were some lower highs on the RSI, or the relative strength index, relative to the price action? That's what we're looking for today. So what you can see here is that in the black bar here, you can see I've marked out higher highs. So this is just a trend line that I've drawn on the chart, higher highs coming into this market. And then on the flip side, when we look at the RSI, you'll notice that we are at the same time, that's the big point here, at the same time we are putting in lower highs on the RSI. And this clue is what we would call RSI divergence. We're seeing the RSI give us a clue that markets are weakening, right? So we are still trending higher, we're trailing higher, but at the same time, strength to the downside seems to be picking up. And this is a clue that the market may be due to reverse soon. And then that's where we see the follow through here to the downside. We'll take a look at another example really quick. Here is a bullish RSI divergence example. We'll zoom in just a little bit here. And you can notice that we're in this downtrend, right? Price is forming lower lows and lower highs here in this market. And notably, we're going to point out the lower highs being formed here during this consolidation. Now, what you'll notice is that when the market is trending really strong one way or the other, usually you see the RSI putting in higher lows and higher highs to match the price action. It is in these rare situations where we see a disconnect between the two that things get really interesting. Here you have lower lows being formed where we have slightly higher highs being formed on the RSI. And that was a potential clue that the market may be ready to reverse, and then we see a nice follow through there. Again, here is another really good example, and then I'm going to show you a bad example. Here you've got higher highs coming into this market, trending higher, looking good, but then sort of slowing down. And that's usually what we're seeing. We're seeing this slope off and slow down a little bit before reversing. And that's kind of what the RSI divergence concept is looking to do. So there's three good examples. Let's look at a bad example. Here's one where you can see this market is trending lower. You've got lower lows coming in. However, the RSI printed higher lows. And then you can see it did sort of get a signal, but then ultimately rolled over further. So it's not going to be perfect. And I wanted to show that just to be, transparent. None of this is perfect, or nothing about technical analysis is perfect all the time, but it's more about just looking for clues that give you enough of a clue that could be promising to actually build strategies around. So anyways, how do we actually trade it, and how can we capture some of the really big risk to rewards that I was talking about earlier? Well, let's say that you're looking at a market like this, you're looking at USD/JPY, and you see this market trending higher, but then you start to see this clue. You see, okay, we've got RSI divergence. How do we actually enter? And more importantly, how do we capture some decent risk to reward on a trade like this? Well, there's a couple different ways, but one way I wanted to talk about is using a relatively tight stop so that we get out if the trend continues, because we don't want to just try and assume this thing is going to roll over and be stubborn about it. We probably want to be more diligent than that. So let's say that we've got this little trend line here drawn there, and we say, okay, we know that RSI divergence at this point, let's say we're looking at it right here, we know that RSI divergence is prevalent, right? We've got the RSI kind of trending lower while the price action is actually trending higher. And so we know that there's a potential reversal inbound. How do we enter? Well, for me, this style of trading that I'm talking about today is going to be a sort of aggressive style in which we are looking to sell on a breakout. In fact, even a close out of any significant breakout level is really what I'm looking for on this move. Now, stop loss placement here. Well, let's talk about the entry first. So the entry for me here would be, let's say that you've drawn this trend line in and you see the first sign of true strength come in that's kind of revealing itself. That is where I would use that as a signal to potentially get short on something here as it's starting to break out. Breakout meaning that trend line that we drew looks really good here. We've got a close outside. And of course, I know I am using a cherry-picked example, but this is the whole point, is just to show you guys some of the good examples first so that you can come back and do your testing and sort of be looking for these sort of concepts. So then stop loss placement is always very important. For me, this would be pretty simple, just above the previous highs, wherever that may be. So in this case, risking anywhere from 10 to 15 pips. This is a 1 hour chart, so it's not a huge risk. But then here's the big part. The risk to reward is really where things come into play, because you have a choice here. You can go for really big wins relative to your risk if you are patient enough for them, looking at things like a 5-to-1 or 3-to-1, something like that. That's going to be kind of coming up to preference, because the higher you go for, the less likely it is actually to get hit. You'll probably take more losses, but that can also be very rewarding if you catch some really big moves in the market. So let's say you went for a 5-to-1. In this case, you would have had a fantastic trade, only risking, like I said, 15 pips or so there to capture a massive 5-to-1 reversal, just using those clues that we got from RSI divergence, right? So in this case, it's sort of like an altered RSI divergence strategy where you are using RSI divergence, the standard sort of entry technique, looking for a breakout, looking for signs of reversal, and then actually jumping in there. But this time we're talking about it with a larger, take profit sort of agenda. We're looking for a bigger move in the markets. You can see that this exact same setup would have been perfect on the flip side here for the bulls. You can see if we drew in some trend lines here. And then let's say, you take it on the long side in this case, right? You see the RSI divergence is in place, and then you're looking for any sign of strength. In this case, buying that breakout on the next candle for me makes a lot of sense. And then let's say that I put a stop just below the previous structure low. In this case, let's see if we could have gotten 5-to-1. We may have, we may not have. Here's 4-to-1. We just missed 5-to-1 before it reversed. And this is what I mean by when you increase that risk to reward, then of course you are bound to take more losses. But in this case, maybe you trailed stops, right? That's the other side of this is maybe you trail stops, maybe you put a 3-to-1, a 4-to-1, a 5-to-1. That's something that you'll have to play with depending on which market that you're trading with. But today we are talking about the general idea first, and then I'm going to leave it to you to go, study which markets you like to trade. Because some people like to trade gold, which might have really strong reversals, where you might trade things like dollar Swiss, where it's more back and forth. These are things that you kind of have to think about when trading specific markets. But again, this one's not bad. I think, you could have had some great moves there to the upside. Even if you didn't get that full 5-to-1, maybe you trailed stops, etc. Here you can see a pretty decent example as well. This one's a little harder to enter. I guess you could draw the trend line here. Right, so you're looking for this sort of the tightening of these two lines, and then looking for a breakout of them. Right, so you've got higher lows coming in here, higher highs, and then you're looking for the failure. You're looking for a nice close outside. So let's say you took the trade right there to the short side. Again, going to depend on how you play this. Maybe you go for a 5-to-1. Maybe you are quicker than that. Maybe you're looking for 3-to-1. If you went 5-to-1 in this case, I don't think you would have gotten the full trade. So if you put stops right above the previous high, in this case, whoops, you've got 5-to-1 being all the way down here, so you probably would have gotten that. But again, this is where you have the option to look for, in my favorite style of trading is trailing stops, right? So looking to trail it along the way. I've made videos about that. You can definitely check them out on my channel. If you search up Trader Nick trailing stops, those might be videos to check out as well if you are struggling with that, but you like that idea. Or if you went for, in this case, maybe like a 3-to-1, maybe you've gotten hit. Yeah, so a 3-to-1 would have been great if you caught that. And so again, we go on and on. In this case, you probably would have gotten stopped out in this one that we showed earlier. So let's say that you, we had bullish divergence. Let's say that you bought this right here. Let's say you bought the close. In this example, we would have probably taken a nice big fat loss, right? So there's a loss and 3 wins with this style of trading. It's fairly straightforward. I think that once you start practicing this, you will be able to spot them quite often. And like I said, I'm going to leave it to you to go test these concepts, try them out for yourself. I think it is important for any trader to go do the back testing and research themselves to really get fluid with a strategy that they're trying to trade. So with that said, thank you very much for watching. Hope you enjoyed, and we'll see you back next time.